G'day folks, it's Jim here from Altered Forex. It's Monday the 20th of July. Well, it was a pretty choppy and directionless end to the week, with traders seemingly ignoring the state of play as the pandemic gets worse and not better, particularly in the US, but also in India and Iran, where the weekend headlines weren't good, and also with a resurgence of the COVID pandemic in parts of the EU, and also here in Australia, where Victoria's doing it pretty tough. Looking at the trend table here, as we can see, it's pretty indecisive on Monday morning. There's a lot of blue on the table, signifying that traders really haven't got anything directional to go on. The euro ended the week on a firm note and does look okay at the beginning of Monday trade. Markets did close though ahead of the EU Leaders Summit, which sits into its third day today, and we could see some headlines from there later on in the session, which is likely to cause a reasonable amount of volatility, I suspect, in the euro. Overall, though, I think the FX markets are going to remain choppy and rather directionless for a while to come, particularly as we head into the Northern Hemisphere summer season. And any directional move that we're going to see in the FX markets is likely to come via risk sentiment flows, and they're going to be on the back of any moves that we see in global stock markets, which seem to have very fully priced in now a recovery in the pandemic, and I suspect are probably rather overdoing it. But we'll see on that one. I think the US dollar does face some downside pressure of its own, while its major counterparties, they're going to find headwinds as they attempt to head higher. So it's not going to be a one-way ride at all, and generally I suspect it's going to remain choppy to sideways, possibly with a minor downside bias for the US dollar over the next month or so, really. So looking ahead at the upcoming calendar, that's going to be pretty thin, as you can see. There's not an awful lot today, although the BOJ minutes are due later on. We've got Chinese interest rate resetting today as well, but apart from that, there's really very little. We've got the RBA minutes tomorrow and the RBA governor's speech on Tuesday, so that'll give us a little bit of direction. But there's not a whole lot else out on Tuesday. And then looking forward later in the week, Wednesday again is very thin, not an awful lot at all. The Australian retail sales. And then we've got on Thursday, actually, we have got the Australian mini budget due, which will see the Australian Treasurer Josh Frydenberg release the government's latest rescue package. Elsewhere, it's secondary data really the whole way through the day, and then on Friday things don't improve an awful lot. But although we do have the PMIs on Friday, so but that'll be the highlight of the week really. It's, as I say, it's all pretty thin this week. So we'll go and have a look at the charts. So starting here with the euro, we're trading at 114.30 or so, where we finished on finished the week on Friday. Now the euro, it's looking fairly solid, but it's been an awful market to trade. It's just been a very slow uptrend, very choppy, and really over the last month or so, going back to mid-June, we're really only 200 points higher than where we were then, and it's had this choppy sideways bias, but it is heading high. If we can take out this level, there's not an awful lot to stop us getting back to this 115 level, and then beyond there we have to go out to the weekly charts, where the next level will be around this high here. That's around 115.60, and then we run into sort of FIBO resistance here at just around 116. So I don't think we're going to get there, and a lot depends on today's headlines coming from the EU summit meeting in Brussels. So the thing I'm looking at mostly on the euro though is, although the trend is definitely higher, we had, as you can see here, we have got some bearish divergence creeping in. The MACDs, the RSI stochastics, they all seem to be running out of steam. So a bit of a setback would not really surprise me. But as long as the euro does sit above this or 113.40 level, the rising trend support, then I think we should probably be buying dips. A daily close below, say 113.5, 113.40, then I think I'd probably be out of any longs, and we could see a re-emergence of a new downtrend. that remains to be seen at the moment. And as I say, if we go to the 4-hour charts, the trend is in a very choppy but higher bias. The 4-hour MACDs, I should say, do seem to be running out a bit of a steam, but we're not going to really see much action until later on, whenever any headlines are released from the EU summit, and that will give us the next move. So looking forward to the Aussie. Now the Aussie is fairly similar to the euro, although it has yet to break this 70.65 high, which we saw back in early June. But along the short of it is that really we've been trading between this 67.80 level and this sort of 70.30 level now for the last the last month or so, and it doesn't really look like we're going anywhere very far to me at the moment. The indicators are pretty flat, and I suspect we're probably in for more of the same. The mini budget on Thursday is probably going to be the major event this week, although the RBA governor, as I just said, will be speaking tomorrow, and he might provide some inspiration. The daily charts are not doing a lot. They're pretty neutral as well. But the interesting thing about the Aussies, if we look towards the weekly Ichimoku, which I have here, and as you can see, we're breaking above the weekly cloud, which we haven't actually been above since way back here in, when was this, sort of beginning of 2018. So I think, yeah, there's potentially quite an important development here, and if we have yet to make a weekly close above the cloud, but if we do, then I suspect we're probably going to see fresh buying, which could propel the Aussie higher. So that's one word. That's a longer term chart, as I say, and we should be keeping an eye on it, but it's just worth bearing in mind. Elsewhere on the currencies, there's really very little to go on. Dollar yen, as you can see, is just chopping sideways between sort of 106.5 and 108, I guess, really, and has been for quite a while, apart from this spike. Sterling, equally, gosh, I mean, it's not really doing an awful lot. I mean, it's just chopping around either side of these FIBO pivots. Went down, got to 38.2% here. We got up to 76.4%, and really we're just chopping around in the middle, just sitting in the middle at the moment. I'm not really sure about sterling. A lot depends on the Brexit talks. The coronavirus isn't looking good over there. So I suspect it's probably going to remain choppy. The daily charts really aren't telling us very much either, and although there's quite wide parameters, 124 is the 100-day moving average and 127 is the 200-day moving average. I can't see any real reason for us to move out of that for the time being. The Kiwi, much the same as the Aussie. The dailies do look as though they might be running a little bit of steam on the top side, but the trend is undoubtedly higher. There's not much New Zealand data out this week. The GDT's out tomorrow, the global dairy trade index, but I think we're probably stuck between 65 and 66 cents for the time being. So the more interesting developments are really in the stock market. Okay, so here we have a 4-hour chart of the S&P, and we closed just below this 4-month high here, and the indicators don't look as though they're going to be doing very much today. If anything, they do seem to be running out a little bit of steam, but we are close to the highs. So the dailies may be pointing slightly higher, but once again, the indicators they have run out of steam, but maybe that's just as part of the consolidation and losing their overbought status. So if we can break this 3200, 3220, then there's a small gap to be filled up here, sort of 33.20. That may yet come about, who knows? And beyond there, well, we're back off to the races again. It does seem to me, though, that the stock markets are pretty much fully priced in any chance of recovery now, and the technicals are getting a bit removed from reality and the fundamental state of play. Interestingly, the Nasdaq, which has been leading the way, that's the Nasdaq there. Okay, so to add some FIBOs in, but that's the Nasdaq. Now this is an all-time high for the Nasdaq. Interestingly, that, as I say, that has been leading the way, and it appears it might be topping out a little bit. So I think a break back below this rising trend support could see a move back towards sort of 10,000 to 210,000 possibly even. But and if that's the case, it's going to bring the S&P and the Dow lower with it. So keep an eye on the Nasdaq. Of course, if we do take out this high here, which is 11,000, just over 11,000, then I guess we just keep on going. But for the time being, I think I'd rather be selling into rallies in the Nasdaq. The weekly charts hugely overbought, so something to keep an eye on. If I was going to do anything in the stock market at the moment, I think I'd probably rather be short than long. And notice the divergence that we've got in the relative strength indicators here, possibly showing us the way. The ASX, which has that's rallied as well, but it's sitting around this 6,000 mark, and the SPY has been up to 6,200, which will now come in line with the 200-day moving average. If we broke above that, which I don't think we're going to for the time being, but if we did, then I guess there's not an awful lot. This high here, 6,300, and possibly even up towards 6,500. I don't think we're going there. On the downside, 58.60, as before, that remains good support, and back below there we could head back towards the 57.50 pivot. Other interesting markets to look at the moment. Silver's particularly interesting, I think. This is a long-term chart, but let me just blow that up. This we've been in this parallel to slightly declining channel now. This is a 7-year chart that goes back to 2013. So and it just looks as though we're breaking above it. This is a monthly chart here, so we've broken above the 100-month moving average, and where we sit right now, if we go back to a weekly chart, as you can see, we're sitting just above the top end of the channel. So that suggests to me that we could possibly head higher still. The weekly indicators look pretty good. They're still trending higher. I guess if we get back below this high here, which is around 18 or 1900, I'd be long, but I'd have a tight stop, say at around 18.75. I think we're taking out this high here. That's at 1965. We haven't actually been up there yet, but if we do take that out, then we can go back to 20 plus and 21, I think. So I'd be looking to buy it, but with a tight stop, as I say, at 18.75. Gold pretty much the same. It's not within the channel. Gold's it's sitting just below highs here, and I think we can possibly take out that 18.15 that we saw last week. And on the longer term charts, as you can see, there's here we are, 18.50. We took out the 2012 high here, and basically there's not an awful lot left now between here and 1900, or between 18.15 and 1900, I should say. The only thing that worries me is the possibility we might be looking at some bearish divergence. As you can see here on the daily charts, we're making higher highs price-wise, but the indicators do seem to be running out a little bit of steam. So just something to keep an eye on. But for the time being, I'd like to buy. If it dips back below 1800, seem to be a buy. And if we can take out 18.15, then I think there's probably some pretty good upside. Lastly, I'll go and have a quick look at oil. Okay, here we have a daily chart of West Texas Intermediate. Now, it's not doing an awful lot right now. It's consolidating in this 40 to 41 area with this heavy resistance above it. And direction really is going to be dependent on the outcome of the stock markets, which in turn will be dependent on what happens with global economic activity. But we did get to an overbought status, but the consolidation has allowed us to wind back to a more neutral phase in the indicators. Personally, I think there's a good chance if we can overcome 43, then I think we're probably heading to 50. In the meantime, it looks to me as though this is going to continue. I still prefer to buy dips, but right now I would be looking at having a stop loss probably somewhere below this low here, sort of around 38.5, 38.30. So buy dips, but with keep a tight stop. But ultimately, I think there's probably other things to look at the moment rather than the oil market. And I think that's probably about it for today. So we'll leave it there for now, and if I get any other bright ideas, I'll be back with another video during the course of the week. So we'll talk to you then. Cheers.